Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. And it has certainly been an explosive week here, where we've seen gold prices up 5% in the latest week. In fact, it's been the biggest move that we've had since July. And of course, over the weekend, we've had the update here from several publications, of course, that Joe Biden has won the presidential election in the USA, although Donald Trump is still very much contesting that. And of course, we want to see how this plays out as we go into a new week. But off the back of this, it has created some amazing opportunities to trade in the latest week here. In fact, our biggest trade has been Palladium, which banked us 5,400 points profit last week, which of course in monetary terms, each one lot that you would have on that position, that would have generated you $54,000 of profit. And if you're in the trade at 10 lots, that's $500,000 that you've been able to bank off the back of that trade. So it has been a massive week, but it's not over yet. We're setting up for some massive opportunities now between now and the end of the year, and then moving into 2021 as well. Not only that, also in the UK and many countries in Europe and now the USA as well, we've moved back into full lockdown here. And what I would say to you is, don't waste this lockdown. If you felt that the first lockdown that you weren't able to really maximize and utilize that time effectively, you've been gifted now with a second chance. We're moving into extraordinary times in the markets right now. Certainly the next 6 months here, you don't want to miss. And we're really only just getting started here. So you definitely want to be in a position to capitalize. Perfect opportunity to level up your trading skills and also supercharge your income as well. So with that, let's just move over to the charts and we'll talk you through exactly what we're looking at here as we go into a new week. So gold prices, they closed at $1,950 per ounce here on Friday. As you can see, in fact, if you go over to the price structure on the weekly chart, it does look very interesting here as we look to be on the verge of essentially starting a bull flag to the upside. We saw it in the summer, we saw it last year and the summer before. Bear in mind that gold prices, they've gone up now 8 quarters in a row. And we've seen this very common pattern, which is where you get these breakouts during the summer months. And often if you can catch it nice and early at the beginning of the move here, as we start to break out of these weekly formations, you can really capitalize on a lot of profits to the upside here. And you can see we've just started to break out in the latest week, and the last time that we saw a similar breakout here, in fact, was during the summer months before we broke out to all-time highs on the weekly there, and then again going back to this time last year over October and November, where we then had the breakouts over December, January and February and so forth. So we have a very similar price structure at the moment on gold on the weekly. But also if you go over to, for example, gold miners such as GDX, we have a very similar price action here, very similar price pattern broken out of the weekly here as well. In fact, GDX is up 10% in the latest week. Gold prices are up 5% in the latest week. And in fact, silver prices as well, we've seen a fairly sizable move up 9% here in the latest week. But really the star move here for us has been Palladium, which has broken out 12.5% in the latest week. That has been an immense move to the upside. I'll just show you the price structure here on the daily chart. You can see the V-shaped reversal pattern that we got. We've continued to build positions over the course of the summer months, which we've been managing, and then we banked 5,400 points on this trade last week. You can see how fast that broke out to the upside, and it's been an immense move there. So that's really been great for our clients, our members at the Gold and Silver Club, to capitalize on such a large trade. But we've still got many more opportunities between now and the end of the year. So let's just move over to gold, and actually moving into next year as well, Q1 of 2021 in particular. So let's just move over to gold again. I mentioned on the weekly chart, we've been building up this base here. We had a significant breakout last week, so effectively 5% move to the upside here, and we've started to build up some momentum. So I would have a look at the daily chart again. What I want to see on gold next week is whether we can follow through here. We've now broken and closed above the 1930 to 1940 zones. We've been able to breach and close above that level. So that was resistance going back throughout the whole month of October. As I mentioned to you on last week's report, over the whole month of October, we had no losing trades, and we were taking multiple trades, and these are trades that we're taking with our members, with our clients at the Gold and Silver Club. This month, what we're looking at now to capitalize on is the potential now for moving out of range-bound price action and starting to get bigger moves here as we go and progress throughout November and then into December as well here. So what I want to observe next week is whether we can break above the highs that were hit in the last week here. So I want to see whether we can break above the 1960 zone, and if we can, then start to make a move back towards the 1980 and then the 2000s level, essentially, if gold can continue that momentum higher. I suspect going into next week, any pullbacks on gold, if we do get them, will get bid into going into next week. If we do see the dollar catch a bit of a bid at the beginning of the week, if we do see stock markets react and under pressure next week, that could drive capital into the dollar, and we might see a bit of pressure on the metals. But again, I suspect that will be short-lived, and the metals could then get bid back into on any pullbacks here. We've seen silver break out, platinum, gold, fairly significant moves to the upside there. However, it's possible as well that the metals don't pull back much and they continue this momentum higher, in which case it might just be limited retracements and we make a full-on retrace back towards that 1980, 1985, 2000 level as we progress throughout the next week and obviously throughout this month as well. So that's what I would be keeping an eye on with gold next week. Effectively, I'm looking at potential for pullbacks to get bought into, but we may not pull back. It could be that we keep on breaking out to the upside here, following on from the momentum that we saw last week. But again, the caveat to that is that if the dollar index, which is currently sitting around the 92 zone here, if the dollar index catches a bid and gets supported at this level and you start to see it bounce higher, that's where it will put pressure on the metals in the short term, which is where, in fact, I would look at platinum, because platinum is the most vulnerable in terms of hedge funds and money manager positions here. They're the weakest right now on platinum versus all the other metals. So if we do see the metals under pressure at the beginning of next week, I would look for platinum to sell off the most and break down, which can offer a sell short opportunity. And once we start to see this level off, so if we do see platinum, they might not, but if we do see platinum prices break down like this, then I would also be looking at buy opportunities again at levels of liquidity such as 835 to 845. At these zones we've seen previously a lot of support come into platinum as well. This is very much a range bound market, so again, if metals are under pressure at the start of the week next week, if you get the usual counterflow, platinum is the one I would expect to pull back the most, but then watch out for support to come in around those zones that I've just mentioned to you. Coming back again to then silver, if you look at this on the weekly chart, it's up 9% in the latest week. We mentioned before, but the Goldman Sachs level that they put out to all of their clients and so forth was $24 per ounce. Their target is $30 per ounce. We seem to be defending that level a lot, so we only really spent a very marginal amount of time below that zone. So it was only about 3 or 4 days below 24 before we broke out last week, and in fact on Thursday and Friday, that's where we had the massive move up 9% in the week there, and we've now broken above the swing highs as well. So again, with silver here, I suspect any pullbacks going into next week will get bought into. So if we do come back towards the $24 per ounce level, I would say that will be a sweet spot going into next week. That would be a level that I would look at for potential buying evidence. We may not get it though. It could be that silver and other metals, they continue to rally to the upside next week and just keep pushing higher here. With that, then I would expect the potential to come back up to the neckline here. So then you'd be looking at a move back towards the previous swing highs here back at the beginning of September. If we just do keep following through to the upside with minimal pullbacks, that's what I would look at on silver going into next week. As I mentioned, you also want to be keeping an eye on gold miners such as GDX, because that has also been leading the move lately as well. So you can see the GDX price action here. We're broken above the swing highs as well and taken out the highs from October. So I would certainly keep that on the radar as well going into next week. And then of course palladium here, we've discussed palladium with you multiple times, particularly over the summer, where we identified the trade setup for you in detail, how to capitalize on that, the fact that we were ultimately looking for a retest back towards the swing highs. Nothing really has changed there. We're still looking for a move back towards the all-time highs in the coming months here. We've still got some exposure, in fact, left on this position, so we've still got trades running, 2 positions in fact on palladium here. You can see where we've broken out to the highest levels now since March, so we're seeing a very strong recovery. That's also similar to copper as well, where copper broke out to the highest levels in 2 years, in fact, where we banked profits on that trade previously for 260 points, and it had a pullback obviously at the start of the week where you saw pressure to the upside on the dollar as markets moved into risk off ahead of the US election. correction, but now markets have sighed a bit of relief here towards the end of last week, and we've seen copper prices continue to push higher. I would also keep an eye, of course, on the energies going into next week. On natural gas, in fact, we banked the remainder of our trade. We continue to trail up our stop loss for 1,150 points profit, so we locked in those profits last week. But the real market that I'm looking at very closely going into next week as well is, of course, going to be crude oil. I am expecting the potential for oil to be under pressure, certainly at the beginning of the week, and I want to see, if we do see that, how low oil prices do in fact go before they start to get a bid. So we may get a gap lower immediately off the open there. So that's also another one to have on the radar, and usually copper prices there also have some correlation with oil prices too. So I would definitely keep that on the radar as well as we go into next week. And again, the lockdowns that we're seeing at the moment, this is providing a perfect opportunity for you to learn a research-driven approach to the market, where you can position yourself the same way that the hedge funds, the money managers, the institutions, the banks do, where you're looking at the same data, market intelligence, capital flows, liquidity levels, and you're also complementing that by looking at the daily cycles, the weekly cycles, the intermarket correlations, seasonality, and alongside that you're aware in real time of what the hedge funds, the money managers, banks and institutions are doing, and you also want to compound that with macroeconomics and research in the market, which will give you a very clear edge. We're expecting back-to-back opportunities between now and the end of the year and into Q1 of 2021 as we get a new president in the USA as well. So with that, if you would like to join a community of successful traders, learn a research-driven approach to the market, and join the Live Trading Room mentorship program, there is an opportunity for you to do so. As a member of the Live Trading Room mentorship program, you get access to our exclusive Live Trading Room webinars. You have access to our real-time trade ideas, access to our institutional research and market intelligence, access also to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.